Ever walked past a regular bank branch and wondered if a billionaire just popped in to deposit a check? Probably not. It sounds almost comical, right? A titan of industry waiting in line behind someone trying to reset their online banking password. The truth is, the super rich play a completely different financial game. And their banks are nothing like the ones we use every day. So, why don't billionaires use normal banks? Stick around, because we're about to pull back the curtain on the exclusive world of hype. You and I use retail banks for the essentials: checking accounts, savings, maybe a mortgage or a car loan. They're designed for the masses, offering standardized products to millions of people. For us, putting a few $1,000s into a savings account is a smart move. For a billionaire, putting even a few million into a standard savings account is actually a bad move. Why? First, there's FDIC insurance. In the US, the FDIC insures your deposits up to $250,000 per depositor, per bank. It's a fantastic safety net for the average person. But if you have, say, $50 million in cash, that $250,000 limit barely covers the change in your pocket. The vast majority of your cash would be uninsured and at risk if the bank were to fail. Spreading it across hundreds of different bank accounts would be a logistical nightmare. But the biggest reason is something much more fundamental: opportunity cost. Money sitting in a low-interest savings account is essentially losing value over time due to inflation. Billionaires didn't get to where they are by letting their money sleep. Every single dollar is an employee, and it needs to be working around the clock to generate more wealth. A 0.5% interest rate from a regular savings account is simply unacceptable when your capital could be generating returns of 10%, 20%, or even more elsewhere. For them, liquidity isn't about having cash in a checking account. It's about having assets that can be quickly converted to cash when a massive investment opportunity arises. So, where does all that money go? Welcome to the world of private banking and family offices. These aren't just banks for rich people. They are bespoke, all-encompassing financial command centers. Think of a private bank not as a place to store money, but as a financial concierge service on steroids. When a billionaire walks into a private bank like JP Morgan Private Bank or Goldman Sachs Private Wealth Management, they're not just opening an account. They're assigned a dedicated team of experts, investment strategists, tax attorneys, estate planners, and even specialists in philanthropy or art investment. This team's entire job is to grow and protect the client's wealth. They don't offer off-the-shelf savings accounts. Instead, they provide access to exclusive investment opportunities that are completely unavailable to the general public. We're talking about pre-IPO shares in the next big tech company, stakes in private equity funds buying and selling entire corporations, or investments in massive real estate developments and infrastructure projects. These are high-risk, high-reward ventures that require immense capital and a sophisticated understanding of the market, which is exactly what these private banks specialize in. They structure complex deals designed to maximize returns while minimizing tax burdens, a strategy far beyond the scope of a retail bank. Let's talk about something called asset-backed lending. A regular person might get a loan based on their salary. A billionaire gets a loan using their investment portfolio as collateral. Let's say a billionaire owns $200 million in stocks and bonds. They need $20 million in cash to buy a private island, but they don't want to sell their stocks because that would trigger a massive capital gains tax bill. Instead, their private bank will give them a loan for $20 million at a very low interest rate, using their investment portfolio as security. This way, the billionaire gets the cash they need, their investments continue to grow, and they avoid a huge tax event. It's a powerful tool for generating liquidity without disrupting long-term wealth creation strategies. This is a level of financial engineering that your local bank branch simply isn't equipped to handle. For the truly stratospheric levels of wealth, the multi-billionaires even, a private bank might not be enough. This is where the family office comes in. A family office is essentially a private company created for the sole purpose of managing one single family's fortune. Think of it as the family's own, in-house version of Goldman Sachs. Some of the world's most famous dynasties, like the Rockefellers or the Waltons, operate through sophisticated family offices. These organizations go way beyond just investments. They manage everything. This includes running the family's various businesses, handling all legal and tax affairs across multiple countries, managing philanthropic foundations, and even day-to-day tasks like paying bills, managing properties, and arranging travel. A family office provides the ultimate level of control and privacy. The strategy is tailored not just to the founder's goals, but to ensure the preservation and growth of wealth across multiple generations. They engage in what's called generational wealth planning, structuring trusts and succession plans to ensure a smooth transfer of assets and legacy. They might employ dozens, or even hundreds, of people, from top-tier investment bankers recruited from Wall Street to household staff. It's the pinnacle of personalized financial management, a completely self-contained ecosystem designed to serve one family's every need. Furthermore, the global nature of a billionaire's life demands a global financial structure. Their assets, businesses, and homes are often scattered across the globe. A private bank or family office has the international expertise to navigate the complex web of different tax laws, regulations, and investment environments. They can help a client buy a vineyard in France, invest in a tech startup in Singapore, and set up a charitable foundation in Switzerland, all while ensuring the entire structure is as efficient and compliant as possible. A retail bank, which is primarily focused on a single domestic market, just can't compete on that scale. So, to put it all together, billionaires don't use normal banks because their needs are fundamentally different from ours. They're not looking for a safe place to park their salary. They require a dynamic, sophisticated machine dedicated to active wealth management. They need elite investment access, complex tax and legal strategies, personalized lending solutions, and global capabilities. Normal banks are built for transactional simplicity and safety for the masses. Private banks and family offices are built for strategic complexity and growth for the few. It's less about the name on the door and more about the entirely different universe of services offered behind it. It's a world where money isn't just saved, it's constantly deployed, leveraged, and strategically maneuvered in a high-stakes game of global finance. Thanks so much for watching. It's a fascinating world to explore, isn't it? If you found this interesting and want to learn more secrets of the financial world, make sure to hit that like button and subscribe to the channel. We've got a lot more to uncover. See you in the next video.